Ladies and gentlemen, welcome to our latest Red Leaf Securities podcast, and it's very timely. The world's ending, apparently. All the tech stocks are getting destroyed. AI is going to get your job and you're going to be sacked soon, apparently. And the whole tech sector is blowing up. That's what they're all saying. I don't really believe it. And we'll have here a very clever way of exploiting the opportunity to invest in the Australian tech sector. I've got Tom from BetaShares. Tom, how are you?
John, all the better for being on with you today, mate. How are you doing?
Pleasure's all mine, mate. Great to see you. Great to meet you. Even if it's online, we've got to do it face-to-face one time. Now, Tom, given what's happened to software stocks in particular, we decided to have you on board. But before we get to that, for the viewers and listeners out there who are not aware, can you briefly explain what an ETF is?
Yeah, of course. An ETF, it's an acronym. It stands for an exchange traded fund. So quite simply, it's a fund. So you got lots of different underlying. You can have equities, you can have bonds, you can have cash. But the key differentiator from, I guess, traditional managed funds is that they're listed on exchanges. Yourself, John, a lot of your clients might be familiar with ETFs listed on the ASX, but there are ETFs listed on exchanges all around the world. And some of the key benefits due to that is the accessibility. You can buy and sell ETFs during the trading day, just like a stock. It gives you good liquidity as well. Another really key benefit of ETFs, and this is the key differentiator, I guess, to some other vehicles like LICs, they also trade at their net asset value. So you're getting the fair price when you're trading them that reflects the underlying basket of securities that you're looking to buy within each ETF.
That's a very good point you said at the end. For the viewers who don't understand, how does the ETFs manage to do that? Who's the price maker, so to speak, so it actually tracks an actual index?
Yes, the way that's achieved is ETFs are an open-ended structure. So when investors are buying and selling on market, there's an intermediary in the market as well called a market maker. And these market makers, if they run out of supply, because so many people are buying, they can come to us as BetaShares. They can give us more of the underlying companies that make up the ETF, and we give them more ETF units. And this open-ended structure can help to ensure that ETFs trade at their fair value rather than supply and demand on the market, making that ETF price move away from the value of the underlying companies.
Now, ETFs, is anyone who's been reading the financial news, have absolutely exploded. Making a bigger and bigger of the volume per day on the market. In your opinion, what are the main reasons why money's flooding into ETFs?
Yeah, so ETFs, initially they were synonymous with passive investing, right? The traditional ETFs were just low cost, broad market. But actually an ETF can have any strategy that has liquid underlying underneath it. So a lot of active managers now are turning to ETFs that are commodity-based ETFs, cash ETFs, fixed income ETFs. And as investors interact with ETFs, those advantages of liquidity, of seeing live pricing, good transparency of the underlying capacity of ETFs, it's just a much more convenient and currently the most efficient way to trade liquid assets in global markets. So any strategy we've seen historically that was potentially unlisted but had listed equities or listed underneath it are now converting to ETFs for those convenience factors, and we're seeing investors really preference those convenience factors.
Now, the ETF that's really caught my attention, like obviously everyone's probably looking at your gold ETF, but I'm really attracted right now in your tech ETF. Could you tell the viewers out there the ticker and what's the underlying assets in this Australian ETF?
Yeah, it definitely can. So the ticker code's ATEC, ATEC. It's Australian All Technology ETF. And as it says in the name, it aims to track the cohort of technology companies within the Australian market. So along with S&P, back in 2020, they launched a new index, the S&P ASX Technology Index. And this went beyond just tracking companies in the information technology sector, as a traditional gig sector IT, but it sought to go beyond that to find companies in other industries like healthcare, in the financial sectors, that were actually technology companies within those overriding big sectors as well. So really well-constructed index that captures the cohort of technology companies listed on the ASX, and not importantly, not just in the ASX 200 or 300, goes beyond to some of the even smaller cap names there that are eligible for inclusion based on, liquidity and size criteria.
So, how does a company get into the index? So, because we know, particularly with technology stocks and particularly what's going on now, you would imagine there'll be a lot of changes
Mhm.
in terms of market capitalization or kick them out or bring them back in. How does a listed company get on that list or get on that index?
Yeah, exactly. So good question. So firstly, there is a size requirement. So new companies need to have a market cap of at least $120 million. This ensures that the ETF can actually trade the underlying. We can't have really, small companies that can't be traded and affects the market, the ETF's pricing. There's also a GICS sector classification that allows them to be included. But as I mentioned, it goes beyond just the information technology sector. So, I mean, every company in the IT GICS sector is included. There's a number of other subsectors that are also included across different sectors, such as consumer electronics companies, healthcare technology companies, interactive media and services companies, along with a few others that S&P have identified that come under different sectors like healthcare, like financials, but are typically technology companies. So they're included in the index. The index rebalances every quarter. So each quarter it will rebalance and include companies that are now eligible. And to your point as well, exclude companies that might be no longer eligible due to falling in size.
So, could you tell us a few of the larger names that have made your ETF in the technology space?
Yeah, of course. And you'll probably be familiar with a lot of the larger names in there. Some names like ComputerShare, which is related to the ASX in terms of doing some of the back end for share trading. Big global players like Xero. Xero, the big accounting software company that's renowned globally, is listed in the Australian market. Along with WiseTech has been a very topical name in markets in recent years. Even names like Car Sales, REA Group, some of these pretty well-known names in the Australian market, that, as to your point, have had some tougher times of late, but really have very strong businesses here in Australia as well as globally.
Now, Tom, we've seen what's going on now with AI, and we've seen tech stocks getting absolutely crunched, particularly the software stocks out there. Now, I know you guys are passive investors, but would you care to have an opinion on where you think the Australian tech sector is going over the next 6 months to 1 year?
Yeah, very happy to share my thoughts. Look, let's be honest. So that the Australian, this index and this ETF is in about a 40% drawdown. So a pretty significant drawdown to date. It's nothing new for a small, high growth index like this. Back in 2022, you might remember, John, we had a pretty significant drawdown in technology names due to increased interest rates during that period. And this kind of drawdown actually did start in November when we saw price or interest rate cuts that were priced into the market turn into interest rate hikes. So that was the first impact that we saw in these technology names. That hurts high valuation stocks. Following on from that, we of course have, as you're alluding to, this big software apocalypse. Fears that AI tools will be able to completely replace, if not seriously impact the valuations of these software companies, of which the Aussie tech sector has quite a few. Some of those names I mentioned earlier are software-based companies like Xero, like WiseTech. Look, in my opinion, hopefully within the next 12 to 18 months, obviously there's some compounding factors at the moment, but hopefully we can see inflation come under control in Australia. That should see rates lower to a more neutral rate in that medium to long term. That's very positive for high growth and high valuation stocks. There's been a very strong negative correlation between rates in this index in the past. On the software question, look, John, we don't believe that the indiscriminate stuff we've seen across software companies of all types is probably warranted. We believe a lot of these companies will be integrating AI into their own businesses, becoming more efficient, saving costs in that way, and protecting their gross profit margins. Look, no doubt some companies will come under threat. We're talking about a very transformative technology here, but that's the great benefit of holding an ETF like ATEC. You're not taking a single bet on a company in a very uncertain period like we're in. You're taking a bet on a cohort of companies, the strong and dynamic technology sector within the Australian market. And even if we see one or two winners grow out of that sector, they'll grow in size in the index and they'll be reflecting in better performance in the index as well. So from an index-based level and from a sector-based level, a few reasons to be positive on a potential rebound in the future.
And ladies and gentlemen, there you have it. If you want to have a bet that the Australian tech sector is going to recover, but you're not game enough to have an individual stock bet, this ETF might be the one for you. Tom, absolute pleasure for having you on. Thanks again.
I appreciate it, John. Chat soon.